Have you ever wondered how to make monthly passive income safely without having to lose your capital? I'm going to show you the way you can do that with this fund I'm going to discuss today. It's been a while since I last made a video about Vanguard Total Bond Market Index Fund, BND. Few years ago, bond used to be one of the most favorite assets people invest in. Recently, I don't hear too much talk about this, so I just wanted to make this video to give you a quick update about BND. And by the way, if you didn't know, bond market is the biggest market that it is. Stock market is bigger, but it's not as big as bond market. So if we look at Vanguard Total Bond Market Index Fund, the price of today is 72.02. It went up a little bit, but as you can see on this chart, the movement is not that much because on a daily movement, you can see it was at the lowest at 74.93 to 75.03. So it's only a few cents a difference, and that's how bonds trade. They don't have huge volatility. So if we extend it to 1 month, we can see it has gained about 0.91, not that much. If we go to 6 months, it's still only 1.75%. But this is just a chart performance. It does not have the distribution that they have paid is not included in this chart. And if we look at the year to date, it has returned 1.3. And if we extend to 1 year, it has returned 2.15. 5 years, you can see, is going down to like negative 12%. And this is because on this chart here on Google Finance, it does not include the distributions that you have received because the return of the bond is the price plus the yield you're getting. Here is another chart showing you the performance of BND. And this is just a summary. As you can see here, this fund is big. It has about 3.89 billion. That's a huge. And it has returned 20% with a drip. But if we look at the share price without having to put distribution, is -8. And when we look at the dividend increase, it has been increasing its distribution by about 6.7. So this is good. It has compound a growth rate of about 1% when it comes to distribution increase. That's not bad. And it pays about 4% or $2.95 per annum. And of course, they do pay monthly. Surely we're going to look more on the fund details and see if this fund is going to be a better fund for you to invest your money. I always make a video on investments updates. So if you don't want to miss any of the important updates for your income and investment, make sure you subscribe to this channel. And if you like this type of content, again, smash the like button. That will help us a lot to grow our channel and grow the community so we can spread this information and education on finances. Now I'm going to official Vanguard website, ticker symbol BND. As you can see here is index and asset class is intermediate term bond. Category intermediate term bond. Expense ratio is very low. It's only 0.03. You're paying almost zero, guys. And if you look at the yield, 30-day ACC yield is 4.16. So you're getting about 4%. And the grade is A. I'm going to show you the grade of different bonds. And this bond is one of the top, right? Now, I've shown you the price. BND was incepted April 3rd, 2007. So it has been out for almost 20 years. Impressive record. And you all know Vanguard is one of the most stable companies. The fund investment objective is to seek to track the performance of a broad market-weighted bond index. The fund generally provides a broad exposure to the taxable investment grade of US dollar-dominated bond market, relatively high potential for investment income, may be more appropriate for medium or long-term goal where you are looking for reliable income, is appropriate for diversifying the risk of a stock in a portfolio. So this is one of the main key factor about bonds. You are not investing in bond to have a huge return, but you're investing in bond as a ballast to your portfolio. You have a lot of stocks in your portfolio. Now you want to have a little portion of your portfolio in bond as a ballast to balance out things. And that's when you buy bonds, and in return, you get that monthly income, especially for this very sturdy bond. Now let's look at the overall performance. Over the years, if we look at since inception, it has returned around 3% per annum. Again, remember, you are not looking to make a lot of money with the bond, but is to balance your portfolio. You have a lot of exposure to the stock market, being it individual stocks or S&P 500. So you have this to kind of like balance out your portfolio. So you're not going to get huge return. As you can see here, the return is very minimal. Portfolio composition, they have over 1,100 bonds, a lot of them. Yield to maturity 4.4, and with the benchmark is 4.4. So it's pretty much aligned to its benchmark. When you look at the average coupon is 3.8. Average effective maturity is 8 years and average duration is 5.7. For people who don't know, bonds maturity is the date that you are going to get your interest. So of course, this is aggregate bond. They have different bonds and each bond expires or mature in different times. So that's what these numbers are. As you can see here, they have 4.4, they have another one 8 years, they have 5 years. So it's pretty much long and short bonds all combined together. But on aggregate is about medium duration. And I have shown you earlier, this bond has a lot of money, 3.89 billion. That's a huge. Okay, before buying any bond, you have to know it's great because this will tell you how safe that bond is. Now, if we look at weighted exposure to BND, they have AAA about 3%. A grade bond is 11.87 and BBB triple B is 12%. So to put it short, they have a different bonds with different credit rating. And the main reason they're doing this is because the safer the bond it is, the less they pay in terms of yield. And the more volatile bonds that don't have a good credit rating, they usually tends to be more riskier, and that way they pay a little bit more. So BND or Vanguard combine all these bonds to have that at least average yield, and that's why they pay about 4%, which is pretty good. But you can see they have a lot of safer bonds from A to triple A, and they have some B, 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 and C is almost zero. Most of the bonds in this portfolio are US Treasury bonds, about 70%. And the other ones, they're companies like Apple, Microsoft, and other big corporation. And here is a breakdown of the holdings that they have. As you can see, for example, they have Federal National Mortgage Assistance Loan, and it breaks down how much percentage they have. So that's how they invest with this ETF. Now let's look at the distribution history. As I've mentioned, they do pay monthly dividends and is around 3 to 4% yield. Here is a breakdown of all the distributions they have been paying for the past year. In 2025, they paid around 24 cents per share, and the yield was between 4% all the way to 6% yield. So remember, it varies. Some months they pay more, some months they pay lower, but on average, you round up about 4%. If we look at how much they paid in 2026, the first distribution they paid was February 4th, and this was from January distribution, and then they're going to pay in March for February. So guys, in this video, I just want to give you a quick update on how to invest your money safely and receive monthly dividends without having to lose your capital. And that way, not only you're getting monthly stable yield, but also you're protecting your portfolio from very volatile stocks that you have or you might have in your portfolio. So guys, thank you very much for watching. If you like this video, again, don't forget to smash the like button. And if you don't want to miss any of the update, make sure you subscribe and hit that belly button. I'll catch you next video. Bye bye.